still in
Bitcoin then now.
This is actually pretty big. Cathie Wood is a multi-billionaire, and she's been bullish on cryptocurrencies. Not just, I guess Bitcoin was a big part of it, but XRP also, like just the whole crypto market cycle. So here's where crypto really gets big, is when billionaires are literally invested into it.
Ever since Bitcoin tumbled from its all-time high, the cryptocurrency market has struggled to regain its footing, leaving investors anticipating a substantial bounce back. However, Cathie reassures that a long-expected surge awaits. Let's get right into the latest interview with Cathie Wood, as she gives her market outlook.
So yeah, if one billionaire calls for a big crypto surge, you kind of would be kind of skeptical. Maybe they're invested a lot. But if, for example, if 5 billionaires talk about crypto returning and going big, then it kind of knocks on wood, right? You can kind of see it will happen.
Prediction for the days and weeks ahead.
As we believe, reaching the end of this rolling recession with some certainty on
this recession has been brutal, and the SEC has absolutely, also been brutal for XRP, which right now XRP can save itself on becoming stronger in that way. It can show that it survived all the bear markets and all the bull markets, and it could definitely grow in that aspect.
on tariffs, the tax package, so the big beautiful bill, and we do believe we'll launch from a rolling recession into a rolling recovery that we
exactly what institutions have been doing is actually buying when everything was low. So instantly when the markets were low, some of these institutions were secretly buying Ethereum and Bitcoin at 18,000 and 1,800. So they made 3x their money.
think we'll gather momentum as we're exiting this year into next year.
And they would literally make a 10x at this price point.
With productivity, the big surprise, and real GDP growth benefiting. We also think the other surprise will be inflation, much lower than expected.
So the markets are recovering, and Trump is doing everything to basically pump crypto and becoming the *1 superpower. We literally saw in one single day XRP go from $3 to $3.4. And then we saw it go from 1 week or 3 weeks, we saw it go from $2 to $3.4. Again, one of the biggest cryptocurrencies, almost doubling in price. And with that being said, it does seem like a lot of investors are right now aiming for another big rally. They're very excited to see where this could go next because the technology is there. And this hype is because the government needs XRP. XRP is providing utility to billions of people every day for transactions.
Because of productivity. Now, a lot of people associate real GDP growth with higher inflation. The higher the growth, the higher inflation. If you look at history, that's absolutely wrong. The higher the growth, the higher the productivity, and productivity is a potent anti-inflationary force. And we think that's going to be the...
So yeah, as more money grows, a lot more people are getting more happy and being more productive. And that's really a good cycle, isn't it? Because right now I see lots more people are finding jobs. 2022 was very bad for the job market. I think 15% or 13% were unemployed during COVID. And there were still people looking for jobs and everything. And the AI sector really opened a lot of different potential jobs, not just in coding, but also, in cleaning offices and in food, cafeteria work, and anything you can imagine. And it's a very big industry. And one of that part is actually opening up the crypto market again, because the AI really launched this meme coin phase and AI phase.
Case this time, perhaps more than ever, because of all of the deflationary undercurrents associated with the explosion in new technologies, catalyzed especially today by AI, which is, as we've gone over in the past, extremely deflationary. Good deflation. The more costs fall and prices fall, the more units explode. That is how we usually exit recessions, or in this case, a rolling recession. And we think this time will be no different, except
we already saw the recession over. This gives it much more time to actually rise to all-time highs.
it will be more exaggerated than usual. So we think that the tide is turning here, and we think the surprises could be on the low side of expectations, meaning the deficit shrinking as a percent of GDP more than people expect. Here you can see what I mentioned about M2. M2 is closing in on 5% growth. That's
So I talked about M2 money supply, and it's a pretty good indicator that the crypto market's up. So look how M2 money supply fell down in 2022. So 2022, 2025, it actually dropped from -5% to 5% here. So 2024, 2021, 2022, it went up to 26%. Basically, people had a ton of money, unlike anything in history, and now we are basically seeing the markets go back up again. There's no money. That's why the crypto markets went up. It's now at 5%. So as people get more money, it's rising again. It means another market, more and more money will be coming in, and they can basically pump that out. With more money, where do you put the money? You can put it in basically XRP, Bitcoin, Solana. Some will put it in gold, stocks. But yeah, the majority of people in 2021 had too much money, and what they had to do is try to get rid of it, or basically reinvest it.
Inflation, double-digit inflation. If we're right, this environment is going to look much more like the 90s, where money growth is above the inflation rate. And it actually,
in the 90s, actually were pumping the markets a lot. So what I'm seeing basically is kind of like Web 2 and Web 3 is XRP, Bitcoin, Ethereum being the same as Amazon, Google, and all these founding companies.
Inflation tends towards a decline. And what that will mean is that the velocity of money is slowing down. Now, the velocity of money, I know I've featured it in charts in the past, but it's been in a secular downtrend since a secular decline. The growth rate had been slowing quite a bit, but the actual decline started in the late 90s with the occasional cyclical bump. Well, we've just been through the cyclical bump, and velocity is starting to turn down again. So that trend is important. If it's still in place, then money growth at this level is not at all a problem in terms of feeding inflation.
So yeah, inflation, and if you have too much money in supply, it basically means that it's worth less, right? And Cathie Wood, which is very smart, she's a multi-billionaire, she has said that it's not going to be a problem this time like 2021 when people went bankrupt and lost their homes. You're going to have just enough money, not like given out for free, but you're going to have enough of it to invest into altcoins, right? It's not going to be like you are going to be too broke to invest in any cryptocurrencies. This is why the crypto and XRP might rally.
The conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything. And
Exactly. This is the big thing that people are excited about. Liquidity.
Interest rates shot up, and it has not recovered. Manufacturing has not recovered.
Again, it's taking more risk for buying, manufacturing stocks, buying stocks, like materials, or buying gold or silver, when people are buying the new assets. And that is basically XRP, Bitcoin, Ethereum. They can just buy these stocks and earn a better yield. And again, I'm not giving financial advice or saying that, but it is pretty obvious that institutions are buying them in that way because they started to trust them more than stocks itself. Look, what if happens like with AMD if you bought it at the peak and it started to crash? Crypto is becoming more and more stable every single year, and it's bringing more institutions. With retail, sure, you can lose 10,000 and still recover. But with a corporation putting 20, 30 million, tons of more and more money coming in, they just can't do that yet, right?
And so we do believe that they will recover as interest rates come down, deregulation takes hold, some certainty about tax cuts and so forth occur, including immediate expensing, perhaps, of capital goods, which would be very positive. So we think we'll move from a rolling recession into a recovery. But what happens early in a recovery, if you'll allow me to call.
So that's exactly what we are seeing right now. We are in the recovery phase. We have been in the last few months, but now we are entering basically the bull phase of XRP. So XRP needed to reclaim $1, $2 to even, get kind of in the loop if it ever drops or dips a bit again. But people are starting to come back. And once the retail comes in, if you're watching this, you're still not the retail. But when the retail comes in, you might be already too late.
All this, that. I know many people think we never went into any kind of slump, but we have sector by sector. What typically happens when you come out of a recovery is productivity kicks in because companies have been very conservative and especially amid all of the uncertainty. So productivity kicks in and actually drives inflation down much lower than anybody anticipates. And I think that's going to happen this time as well, which is not normal. And you can see how abnormal it has been.
So yeah, Trump has been very vocal in crypto that way and in cutting the interest rates because he believes the market will recover faster. More than anything else, we're literally saying the 3-month treasury yield changing forever.
It's been inverted ever since then. And this is one reason we believe we've been in a rolling recession. And the headline numbers obfuscate this rolling recession. But if you go sector by sector, manufacturing down and out, housing down and out, small businesses constrained by all kinds of metrics. Monetary policy is too tight. So here is real GDP versus productivity. Real GDP is in the purple, and you can see how this rolling recession has been obfuscated, I think, holding real GDP growth up over the last few years as housing has crashed and manufacturing has really been.
So yeah, more and more institutions are starting to not really trust what's going to happen with their money. Look at 2011, plenty of real estate. In 2009, plenty of real estate got foreclosed, never to be built again. A lot of companies went bankrupt. Tons of companies lost their money. So they want to put something safe, even if it gives stable returns. But right now, the issue with the stock market is you need a ton of money. You need like 200, 300 million to make anything serious at this point, or at least 10 million. So it's not for retail investors to make their money. It's literally crypto being more speculative. It's slightly more risky, but it gives 3 times more reward. And people are now willing in this fast market with technology coming out every single week, new AI. They're willing to take that risk. They're willing to go a step further.
Under a lot of stress has been the government sector, and now that's starting to give way, and the high income part of consumer. And we know from sentiment indicators that their sentiment has diminished as well with all the uncertainty around tariffs and geopolitical risks. So we think the bias here in this number is down. You can see on a year-over-year basis, even during recessions, look at the early 90s, that was the S&L recession, it barely went down. In the tech and telecom bust, it didn't go down. We needed 2 shocks, the global financial crisis caused by mortgages and COVID to get it down in any big way. You can also see productivity. You can see how it picked up in the 90s. One of the reasons that, as the internet was taking off, one of the reasons inflation did stay very low. And you can see it has been languishing at
So yeah, the banks are getting now more nervous about all this technology, and they want to be basically sped up. Thank you everyone for smashing that like button as well. But this is the big news that I'm seeing right now is basically crypto is coming out. The real recession that we have been in which crypto hasn't been growing is now slowly getting away. She is explaining, Cathie Wood. And I do definitely agree with her. FTX has been a brutal year. Terra Luna Classic 2022, a very brutal year. People lost everything. Some people lost their XRP and are still waiting now. But the good news about it is it can recover very fast. It can recover in 1 to 3 years. So with the Great Depression, you needed many years, like 17 years. And people have been calling for this recession to happen since 2009. People have been telling me the recession is going to be since 2009. And let's be serious here. What we're seeing now is basically crypto reaching new all-time highs, and it's getting a lower chance that we are going to be seeing Bitcoin for 18,000. Because if someone buys Bitcoin supply here for 40,000, it's a very low chance that they will sell it for 20,000, right? They don't want to take a 50% loss, especially if it's a big institution. So once, Bitcoin reaches 170K, 140K, there's almost like a very slight chance that it will dip that low. This was probably the worst market you have ever seen. And Cathie Wood is basically saying, like, we're in the clear. And she's saying, she saw this many times happening recession in 1990. She saw, the potential that AI is coming here. And that said, this is changing like crypto forever. Crypto could literally be doing exactly as it's doing now. It still hasn't started its full bull run yet.
So we need Bitcoin.